Time, Sylvia Vadva in Frankfurt. Let's get back out to Martin Bakodax, though, absorbing the news of the Bank of England's interest rate decision. Martin?
Thanks very much, Louisa. I mean, we kind of have a small business focus to this, as well as the larger market implications, which you guys have been talking about. That's why my next guest is kind of interesting. If we've ever taken a black cab anywhere around the city, it's probably a 1 in 3 chance that we've ridden in one of this gentleman's cars. It's Geoffrey Riesel. He is the chairman of the Radio Taxis Group here in the UK. Thanks for joining us, Geoffrey.
Thank you.
Astonishing stuff. You told me you heard the decision in the car along the way.
On the way here.
Tell me your thoughts.
That's right. Well, business has been calling for a 1% cut in interest rates to try and kickstart things, and we're quite encouraged, certainly I am, that the fact that the committee have taken this step of 1.5%. I felt that at 1% it would have just about maintained the status quo and would have kept things from getting worse, in fact, and throughout the coming year, throughout 09. But I think 1.5%, although I don't think it'll have a magical effect, it will certainly do something to change this cycle, which at the moment has been downward.
It's interesting, Geoffrey, when you and I were speaking off air, you said something that struck me. Your business would be relatively sensitive to the changes of spending patterns. Absolutely. You told me you saw this coming quite early.
Yes, we did. I mean, I have to tell you that when the banking crisis started last October, we already started to make reorganisations in our organisation to make sure that we're able to cope. But some of the big corporates, I mean, the taxi market, I mean, the business that we do is very similar to the black car industry in New York. So we're picking up many of the corporates, many of the businesses. And the thing I would say about that is that we could see the effect it was having. Some of the big merchant banks, they're down by as much as 50%. And much of that is not that they haven't gone elsewhere. Much of that is they're just not doing business. Now, it seems in the banking sector that's been really badly hit. It seems the law firms and the accountancy firms are obviously quite busy, but anybody to do with financial services is suffering badly at this moment in time.
What can a small business like yourself, though, do in order to manage that change? I mean, clearly your input costs hopefully are going to come down because oil and petrol prices are falling, but are there anything else you can do aside from the classic job cuts?
Well, in an organisation like us, we're always trying to make sure we're a very technology-based company. We're always bringing in new systems. We're working hard to try and make sure that we have excellence of operation at our core, and therefore we're continually investing. At a time like this, one has to be cautious in terms of cash flow and liquidity, because in tough times, cash is king and liquidity is important. And so consequently, we are going ahead with our plans, but we've made reorganisations to make sure that our costs are manageable. We did do that very early. Yeah. And it is an important factor. It's a very important factor. And small businesses have to do that. They have to bite the bullet. And
indeed, and be conservative. Geoffrey, thank you very much for joining us today. I do appreciate it. Geoffrey Riesel joining us, Louisa, the chairman of the Radio Taxis Group here in the UK. So it's not just for us, Louise, it's not just for the markets, it's for people right at the thick end of it who need to be concerned about the pace of change in the economy.
Martin, good points that have been made from your end. Thank you very much, Martin Bakodax. They're outside the Bank of England. I just want to draw your attention to moves that we're seeing in sterling and the pound against the dollar, currently higher by almost 0.7%. Now, initially, just reminding ourselves that right after we saw the 150 basis point cut by the Bank of England, we saw a little bit of a dip in sterling. That would be an initial reaction, only then to recover those losses quite significantly now to trade higher, despite the fact that we've had such an aggressive cut in interest rates from the Bank of England. People still thinking it's proactive, that the Bank of England is acting to try to shore up the economy,